posted this question last year, and it comes up quite regularly, so always worth talking about as much as we can. I suppose the best way to answer this question is to talk about kind of the different fees that are at play, and within this industry, there are lots of different, lots of different elements that can be charged for, and the fee you are ultimately paying will be based upon how you are being charged for these different services, whether they are individually charged for or bolted together. So for example, you can pay for investment advice, so the actual advice on what investments to make, when to make them, how to make them. You can be charged for planning advice, the overall coordination of your financial circumstances and the optimization from a tax perspective or from an efficiency perspective. There's advice on how to do that. That can be charged for. You can be charged a setup or an initial fee. There's a well-known investment manager that is famed for its 4.5% upfront fee. So that can be a big one to watch out for. Custody, how are your investments and savings actually held? Some organizations will charge you directly for housing and storing and kind of securely keeping your investments. Commission, or I suppose, or transaction charges. This actually is falling away from our industry more and more, which is a good thing. It was very much a product of the stockbroking or traditional trading kind of services that were offered a few years ago, and you were charged every time you bought and sold an investment. Some organizations and some services still do charge that way, so keep an eye on that one. There are market costs to consider. So, for example, stamp duty on UK stock. There will be foreign exchange charged on purchases of overseas securities. If you are a sterling investor into dollars, for example, there will be a foreign exchange charge levied there. There can be local agent fees. There's a PTM charge on certain size transactions. So there can be a number of market costs to consider, and how your organization charges you for them needs to be looked at. Fund manager fees, if you're working with an investment advisor who chooses to use funds that are not part of their setup, or an external fund manager, you will be paying a fee within annually to use that fund manager, and how that is sort of factored into your overall cost needs to be considered. There's transfer fees at times. Sometimes people will charge you to move stock in and out. They can charge you per line of stock to move from one organization or even to join another. So think about that if you are changing providers. I suppose finally, maybe wrappers. Certain wrappers can come with their own fee. Some organizations charge for pension and ISA wrappers, less so these days, but if you are using structures like bonds, on or offshore bonds, these can come with their own sets of fees. And essentially, the fee you're going to be charged is going to be derived from how these different services are packaged or not packaged together by your provider. If you are using multiple different providers to custody your assets, for investment advice, and then for the fund management, you're going to have 3 sets of charges that are all from different organizations, and that could lead to a higher fee. And at times, working with a manager or working with a company that can do everything under one roof is often a way to reduce your fee. Not always, but often. But understanding kind of what you're paying and how you're being charged is really, really important. Every single manager will produce a rate card, which is often very transparent, but not always very clear. So sort of alongside getting your hands on that rate card, ask for a fee estimate or fee disclosure for what it is you're likely to pay based on how you're going to use your account. It's important to understand kind of what fees are going to apply to you and what the cost of working with your manager are going to be for the coming year. And as I said in previous shows, understanding your investments and your savings is really, really important. Take an active interest in it. The fees is incredibly important. High fees are an immense drag on performance of investments, over a number of years. But you've got to balance that with, paying for good advice, because the cost of getting it wrong can be greater than the cost of paying for advice. So I think ultimately understand how your manager is charging you for what they're doing, and then you'll have a way to compare that manager to others in the industry.